If you are purchasing a property or renewing your mortgage in 2025 and you are not at least considering a fixed rate mortgage, you are making a huge mistake. While variable rate mortgages might seem attractive as their low interest rates continue to trend downwards, locking into a fixed rate for your loan could provide the security and stability most homeowners are craving, especially in times of uncertainty like right now. But here's the problem. Too many buyers get caught up chasing the lowest rate without fully understanding the risks that come with variable rate products. And for some borrowers, specifically first-time buyers and those on fixed incomes, taking unnecessary risks could cost you way more than you think. Over the years, and particularly since the market peaked in 2022, I have seen way too many people gamble on variable rate loans that cost them thousands, if not tens of thousands of dollars more in interest payments, rather than locking into a fixed rate product that would have given them 100% certainty of their costs and that ever so important ability to sleep at night. So in this video, I'm going to share with you the reasons why you should consider a fixed rate mortgage in 2025. And by the end of this video, you should be able to discover if a fixed rate mortgage is right for you. But first, really quick, if you are looking to make a move in Greater Vancouver, you can book a call with me right now using the link in the description below, because my team would absolutely love to help. Subscribe to the channel to stay up to date on the market, then click the like button. And as a thank you for doing that, you can also download my free PDF buyer's guide in the description as well. And now on to the first reason of why you should consider a fixed rate mortgage, and that is if you are a first-time buyer. The reason I think first-time buyers should go with a fixed rate mortgage is they are way less experienced in the marketplace. Often we're coming into these properties with between 5 and 10% down, not a lot of equity. And first-time buyers generally don't have the financial backing that a more experienced property owner would have further on down the road, just as they age and gain more wealth. In this category of first-time buyer, I'm also going to put people that are on fixed incomes. If you know that you don't stand chances of increasing your salary over the years, and you're not at a spot in your career where you're actually going to advance, well, you are somebody that should have a low risk tolerance along with first-time buyers. Basically, what I'm trying to say is anybody that is in a tight spot and would be devastated by an increase in payments, you should pick a fixed rate mortgage. There's just no getting around that. And that is because of reason number 2. A fixed rate mortgage gives you payment certainty. Here in Canada, when you lock into a fixed rate product, you will have a mortgage term somewhere between 1 and 10 years, with the most common mortgage being taken at a 5-year term. When you agree to this mortgage, your payment and interest rate are locked in for 5 years. So yeah, if rates go down, you will not get the benefit of that. But what you do have is the benefit of knowing exactly where your housing shelter costs are going to be for the coming 5 years. I find that over the last few years, there's been a lot more people gambling, but historically, Canadians have just wanted to know where their payments are going to be, and they weren't always necessarily focused on getting the absolute lowest rate. Speaking of the absolute lowest rate, reason number 3 that you should consider a fixed mortgage at this point in time is that the bond yields have come down. And that means that rates currently for fixed rate products are lower than they have been over the last few years. You see, the headline that you hear about all the time on the news about the Bank of Canada lowering interest rates, that only affects the variable rate mortgage products. The fixed rate products are connected to the bond yields, and basically that's an estimation, if you want to think of it this way, as where people think the economy is going to be in the future. Since our economy has slowed down in Canada and is expected to continue to do so, bond yields have dropped, and that has brought the fixed rate products lower and lower. And although there's a high likelihood that right now is not going to be the bottom of rates, the rates that are available are dramatically lower than they were previously, and most people are pretty happy with the rates that are being offered these days for fixed products by lenders. Reason number 4 to go with a fixed rate is that you will have no volatility. Again, over the last 4 years, we were in a rate hiking cycle. This produced crazy results for people that they never saw coming. With things like trigger rates, that's when a variable rate mortgage actually increases so much that your payment has to increase too, which is actually not what people were expecting when they signed up on those variable rate mortgages, which could then lead you to payment shock, which is absolutely crazy. One day you get hit with this notice from the bank that you weren't expecting, that your payment is increasing an absolutely absurd amount. And at the same time, you could find yourself with an extended amortization, meaning your payment did not go up. But when you go to renew at the bank and you took out a 25-year loan, you might find that your loan is now amortized over 40 years. And this is all because rates went up and the type of product you had didn't adjust for it. Or did adjust for it? Well, the good news is with a fixed rate product, particularly 3, 4, and 5 years that a lot of my clients are looking at right now, you don't have to worry about any of this. Your payment is your payment, 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 and a lot of the stress is then removed from your life. Number 5 is economic uncertainty. We live in interesting times, and there is a chance that over the next little bit, our economy could get worse. If it wasn't bad enough that the economy didn't look like it was doing very well, housing costs were at all-time highs, and immigration doesn't seem to be propping us up anymore. Now we have threats of things like trade wars, and those proposed tariffs, whether or not they are here for a short or a long period of time, well, they could have a devastating effect on our economy. Like, way worse than we thought it was going to get. With tariffs, it's likely that the Canadian dollar will weaken, unfortunately. And so you've now got the cost of US exchange importing inflation, as well as the tariffs themselves importing inflation. And it is thought that the Bank of Canada will continue to lower rates in order to allow Canadians to pay for these new higher costs. But at the same time, the Bank of Canada has only one mandate, and that is to keep inflation under wraps. And there is a very good argument that if these tariffs stay long term and our dollar stays low for the equal amount of time, that we could see inflation spike, which would cause the Bank of Canada to then increase rates. The truth of the matter is, around the uncertainty, it's called that because nobody knows what's going to happen. And if you switch to a variable rate product this year, you too don't know what's going to happen. It could do you wonders, and you might end up in a much better spot in the future. But if you're not willing to take that risk, then a fixed rate product is right for you. And that is because of number 6. When you get a fixed rate product, you set it and forget it. Most Canadians just want to live their lives. They want to think about their mortgage every 5 years when that term comes up and renews. And for the rest of their life, they just want to know that they can make their mortgage payments, and then that gives them the ability to focus on other things that are more important, like their marriages, kids, or who knows, whatever else is important to you. When you sign up for a fixed rate mortgage, you are saying, you know what? I am not going to focus on the economy and the stocks and everything going on in the world. I can just really then narrow down my focus onto spending time with my family, doing better at work, maybe starting a business. But I don't then have to worry about all of these outside pressures that will weigh on you if you pick a variable rate mortgage. So now that you know the reasons why a fixed rate might be the best for your purchase or refinance this year, check out this video to discover the other side of the argument, and if a variable rate mortgage might be more your speed.